Korea this week mapped out a bold economic strategy for the second half of the year, revising its growth outlook. And at the same time, the local stock market has been experiencing extreme volatility, prompting the government to look closely into the stabilization measures surrounding single-stock leverage ETFs. For a closer look, our economics correspondent Park Junan joins us in the studio. Welcome back, Junan.
It's great to be back, Tommy.
Junan, so let's start with the government's economic blueprint. What are the core strategies and visions?
Right, Tommy. So to bring a fundamental turnaround to the Korean economy, the government announced its 3-4-5 vision. So this aims for 3% potential growth, a top 4 global trade status, and a $50,000 income. A 3% growth projection this year is a substantial leap from the initial 2% forecast. If achieved, this will mark the highest growth rate since 2021. To achieve the 3-4-5 vision, the government is accelerating 3 mega projects centered on semiconductors and artificial intelligence. They are also designating super innovation projects for advanced sectors like next-generation secondary batteries and sensors.
Well, for these ambitious growth targets to be truly sustainable, the foundation of the economy itself must be strong. Then how does the financial market factor into the broader economic growth, Junan?
Right, Tommy. So as you just mentioned, a nation cannot build a strong economy on a weak financial foundation. For Korea, advancing and revitalizing its capital market is a necessity. The government and economic institutions understand that to draw in global capital and boost corporate investments, Korea must offer an accessible, reliable, and highly attractive financial market. A major step toward this is the internalization of the Korean won. By making the local currency more widely accepted and easier to trade globally, foreign investors will face fewer currency risks and administrative hurdles. Ultimately, creating a transparent, globally aligned financial environment is what builds trust. And that trust is the very foundation required to support the government's massive technology investment and overall economic growth strategies.
Now, Junan, speaking of the financial market, we have to talk about the recent massive volatility. What is driving these massive swings and how is the government responding to them?
Right, Tommy. So to understand the market volatility, we have to look at the structure of the KOSPI. So the benchmark KOSPI has plunged from the 9,400 point level down to below 7,000 in just 3 weeks. So-called S7, 7 companies including Samsung Group affiliates and SK Group affiliates account for over 70% of the entire index, meaning their movements affect the whole index. So also a massive catalyst amplifying this volatility is the recent surge in single-stock leverage ETFs tied to Samsung and SK hynix. A leverage ETF uses financial derivatives to multiply the daily price movements of a single stock. The problem is how they operate. To maintain their target ratios, ETF managers are forced to aggressively buy or sell large amounts of the underlying stock right before the market closes. Let's take a listen to an analyst.
For foreign investors in particular, since leveraged ETFs were introduced on May 27th, Korea has become a very attractive market for trading volatility. With fear of missing out taking hold, a huge amount of leveraged money has poured into those ETFs. What we call the wag the dog effect has emerged. Even a small move in the futures market can trigger much larger swings in the broader market, significantly amplifying volatility.
Recognizing the severity of this issue, President Lee Jae-myung has ordered financial authorities to swiftly prepare measures to protect retail investors.
최근에 그 삼성 하이닉스 ETF 때문에 많이 당하고 계신 모양인데. 자, 한국거래소.
있습니다.
여기도 ETF 때문에 시끄럽죠?
예, 그렇습니다.
보안대 제가 잘 신속하게 마련하도록 하시고요.
In response, the top 4 economic and financial chiefs, which include the Finance Minister, the Bank of Korea Governor, and the heads of the Financial Services Commission and Financial Supervisory Service held an emergency market check meeting today. Going forward, as early as August, investors in leveraged single-stock ETFs will be required to maintain a cash deposit of 30 million won or around $20,300 and purchase these ETFs in minimum blocks of 20 shares. Given that the underlying stocks currently trade at around $7 to $10 per share, the minimum investment in a leveraged ETF would be at least $140. With higher entry barriers, the policy changes could lead to a decline in trading volume.
Well, it's definitely a critical time for the Korean economy and also for markets to grow. Junan, thanks for the coverage.
Always a pleasure, Tommy.